Hi there, welcome to my latest video. In this video, I'll be covering news released by the stocks I own this week, and also talking about the lockdown, and also my trip to escape hunt in Basingstoke, the news site, Site 11. By the way, if you like this video and you want the next one to your inbox, hit that subscribe button and the notification bell. Okay, let's have the boring disclaimer. Okay, here's the boring bit. Anything you hear or see in this video is not investment advice. It could be absolute rubbish. Please do your own research. Okay, let's start off with the escape hunt. Price 925, of course, marking up 7.43. They announced further progress in the UK owner-operated estate. Basingstoke opened 11th site, 6 game rooms, and they've got Doctor Who there, of course. They've got outdoor games. And they say this is, I went there actually yesterday, I'll show you some pictures now in a bit, but prime location, festival place, very busy. We're driving in there, very busy, going in, footfall is very big, and even you had to wear masks in there, which I'm not a big fan of course, so just shopping with, I'm not a big fan of shopping. So shopping with masks, it will definitely put me off. But a lot of people there, and the one-way system there, of course, didn't seem to put off people going there. Also, Norwich has been opened. That was site 10, which is they said opened incredibly strongly. Sites in prime schemes such as this, a great deal of optimism for sites. And the 12th is on work there. Obviously, it's locked down right now, so I don't know if that's going to go ahead. But they're hoping to open that in December. They say it's now substantially complete, and is similarly positioned in prime location in the town, giving confidence it will be well received. We continue to see attractively priced sites in prime locations and are actively continuing our UK site rollout. So I don't know what's going to happen here, because we've got, till Wednesday pretty much to do some more work on Cheltenham, whether they'll try and get that done in time for opening in December. But now they're saying this lockdown may be extended to government. They can't have this kind of uncertainty. Ridiculous. Anyway, so here's some pictures. There's the wife, there's Fred and Monty, the kids, outside escape hunt and while we're there, lots of people were inquiring about it. Lots of people coming up to the thing, asking for gift vouchers and all that stuff, and look at the book. So a lot of interest there already. This is just inside the sort of reception area, nice little area compared to the previous escape room I've been at. Was basically a little office outlet on a retail site, on a sort of industrial site. Not very nice. This is a lot better done. There's some nice big LCD screens on the side there showing all the games. This is us, there's me with my hat, my bald head, my wife and the kids again before we go in. Of course, we can't show you any pictures inside, but I've got to say, the staff, Zana was there, a lovely lady, so enthusiastic, really engaging with the kids. The kids loved her. They gave her a sticker, and she was really into it. And and the kids absolutely loved it at all. The themes there, the props. We did Aladdin, and the set was fantastic. Things you touch, they move, they light up, noises, sounds. It's so well done. The props are well done, very professional. Me and the wife nearly killed each other. Quite stressful, but ultimately very enjoyable. The kids loved it. Fred was very encouraged. Said, "You wouldn't have got out if it wasn't for me." So they give you clues. It's very well done, and I like it a lot. And I'll probably buy some more shares if they dip. But so there's the current locations now. They've got these are the black, the current ones. The blue ones are upcoming. They've also got Dubai as well, site 11. So site 11 there, site 2. In fact, Basingstoke is now site 12, isn't it? That's right. But site 11 UK, but owner-operated site 12. So Cheltenham next, Watford and Kingston in the pipeline. So legal signed to 15. At 15, of course, normal COVID. If it wasn't for COVID, they break even on site 15 and 16. So they're getting towards that. In the medium term, aim to get 20 UK operated owner sites. Longer term ambition of 50 sites. So average revenue generated by each site is about 500 grand, $500,000 per annum. EBITDA is about 150 on a 10 times 10 multiple times 50. That's 7.5 million EBITDA. Average growing leisure companies are valued 10 times EBITDA. So that's 75 million. That's a 10 bagger there. That's not including remote, outdoor and played home games, which remote and outdoor could be very big, I think. And escape hunt's current valuation is 7.4. Like I said, cash there, 4.3. Last time lockdown happened, they hardly burned any cash because of furlough and schemes. They used about 94 grand in cash, I think, for 6 months. So they've got plenty of cash to last, out this period. EBITDA-wise, each site is worth around about 1 million to 1.5 million if they're busy to them in value. They've just opened site 11, so we're talking about a valuation of 11 between that and 16.5, currently valued at 7.4. This is because, of course, COVID discount. This discount is now ranging from 48 to 125. That's between that and that, of course. So that's the percent discount you're getting. This discount will last. What's the risk here, you've got to ask? The biggest risk for any small company, pretty much, is survival because of cash or debt. They get sunk by debt. They've got no debt. They've got cash to look at this period. It's a period of opportunity for us investors. Like I said, they're already at 50% discount pretty much because of COVID. And to me, this is an opportunity to buy a market-leading growing business at discounted value, but it's only opportunity if you believe they will return to pre-COVID growth. I do. They were up like 55%, like for like, before COVID. So the demand is there. There's no problem with demand. People want to do this. And I asked the kids, do you think you'd recommend this? They said, yeah, to my friends, absolutely. So I think when you're in, say 20 sites around the UK, you start to get to inflection point where, as a brand, they start to become more recognisable, But I reckon they'll do this for 5 reasons. Prime locations. They can afford to take in these prime locations now. Pre-COVID, they couldn't. There are, the landlords, commercial landlords of these places are offering them. I went to a festival place and there's quite a few empty units there, because of COVID. So the landlords need tenants in these sites, and so they're offering them good incentives. Currently, 11 sites across the UK, 38 franchisee sites in 15 countries. By the way, that valuation above, that also didn't include franchise sites. Growing market. Personal consumption expenditure on experience-related activities grew 4 times faster than expenditure on goods. So buy, experiences, not stuff. It's part of this happiness movement to millennials and all that stuff. Organic growth in the 9 weeks of the 1st of March before lockdown, revenue from owner-operated sites rose 55% on a like-for-like basis. Market leader, 11 sites already in the UK, 12 sites with Dubai. Legal signed on 15, mid-term target 20, long-term 50. Premium product, Traveller's Choice Award, TripAdvisor agreements with BBC and Netflix. You're not going to get your independent down the road in an industrial state signing deals with the BBC and Netflix. It's not going to happen. So that's why I see, to me, the best time to buy is when the fear is high. When else are you going to get a chance to get a decent chunk of a business that's going to be a market leader with a premium product? It's going to be like the Hollywood Bowl in a couple of years where it's that recognisable a brand, I think, and to have a nice chunk of this company at this level, I think it's an opportunity. Of course, you've got to believe whether they'll grow and succeed. I do. Okay, next one, Gfinity. So final year results ended the 30th of June. Like I said, always ended there 30th of June. And this is a business in transition. And they said, a year of transition with a new management team and a clear targeted operational focus. Now look at the change here. Very impressive. So gross profit has increased by 167% from 2019. It's gone from 1 million to 2.7 million in that year. Even though revenue's gone down from 7.8 to 4.8, that's because the old management here were focusing on revenue for revenue's sake. Some of the stuff they're taking on was loss-making. Doesn't make any sense. John Clark came in, new CEO, cut all that out, refocus the business. And look, gross margins now increased from 13.2% back here to 61.8% year on year. Now, that's a massive increase in gross margins. H2, look at that, just second 6 months, margins was 73.4%. So I don't know if you know the story, but John has decided to focus on 3 areas: owned, which is GFIN digital media, co-owned partnerships, building communities for others. And so if you look at this is a very exciting part. This is their owned space. These are websites. They've gone from having 2 English language websites with roughly 1 million monthly users to 3 English language websites, to sites in Spanish, Portuguese and Arabic. These sites are now generating 12 million users in June from 1 million a year ago. They've just started they launched this in May, Gfinity Digital Media, and they're really focusing on it, and it's really paying off. And I see this as a very exciting part of the business. Like I said, you can't take this away from them. If you do Google searches on any hot titles, in gaming and in that stuff, Gfinity Media are featuring quite highly in Google search now. And of course, you get premium sort of advertising revenue from this. So look, after June, digital media generate revenues of just 400,000. That's all. They only started, I'd say, in the second quarter, they started focusing on this. We expect revenues from the group to exceed 2 million full year. This business didn't exist before May. It's completely high margin, revenue business that didn't exist. And so I'm going to go through my forecast. First of all, this is what's happened this year, pretty much. I'm only 5% growth here each month on month. And this is when they really started focusing on it. John came, I think, joined the business last year, of course, became CEO in March. But he started focusing on this part of the business back then. And they've really started upping it here. So I've only gone for 5% growth here per month, right? And that's what they earn pretty much, like I said, 400 grand this year. All right. Next year, they're targeting 2 million. Okay. And this is how they get there, I believe. This is the growth panned in here, 15% per month. And they've been doing this pretty much. If you look at their releases, they've been doing these figures, and that's what we're going to be heading at in there. Now, for next year, 2021, this is, I've brought this growth down, of course, because the revenue is going up, so you can't keep growing at a big, substantial percentage gain. So I brought that percentage growth down to 5% per month. And even if you do that, you get to 6 million by the end of 2022. So the gross margin, 70%. That's 1.45 gross profit in 2021. 2022, that's 4.22. This is only 1/3 of the business. It's probably the highest margin part of the business, the fastest growing, but it's 1/3 of the business. And this didn't exist back in May. Excuse me. This doesn't include VR10 League. I'm going to sneeze. And they agreed with 3 leading broadcasters for the Gfinity Abu Dhabi Motorsports Management new VR10 League with BT Sport, ESPN, Stars Play Arabia, as well as highlights being broadcast across team and talent channels in a unique distribution plan that spans both broadcast and digital media. So this kind of revenue doesn't include that. That kind of revenue there, there does not include this. Doesn't include this, as yet. Just signed a Red Bull, big players in esports, partner for Red Bull, for the Red Bull's simplified League of Legends World Final Show. I think they'll be doing more with Red Bull in future because they've got an esports channel themselves with over 300,000 subscribers. Doesn't include this, Cadbury's Heroes Parents League. That's starting, in fact, if they're training now, these celebrities, and it's going to start in November, this league. Doesn't include this. So F1 to deliver a series here for for F1 series. Virtual Grand Prix extended to June this year, and I can't see it. They've had some good replies to this and response to this. I can't see them stopping this. It's multi-year deals, of course, multi-year agreement there. So this revenue will continue over here, and also with BT. Gfinity partners with BT to deliver new BT Sport. This is all this year, second half this year, I think. All this year they've been signing these, and these are the relationships they have. Gfinity, Forza, Premier League, EA Sports, Activision Blizzard, Red Bull, HP, Viacom, ESPN, Twitch. They've done all these relationships. So it's a big deal. So I'm thinking total revenue for 2020 was 4.8 million. Only £400,000 of that was from Gfinity Digital Media. So let's say for 2022, let's skip next year, revenues remain static for other parts of the business, but GDM grows to 6.2, total revenue 10 million, gross margin 7 million, and operating margin 5 million. PE of 30, which is a fast esports business, that's fine, In fact, it probably could be a lot more than that. But 150 market cap. Where are we at the moment? That's 5 times bigger than we are at the moment. And that's doable. I believe that. And of course, we've got this exciting sale process deal going on at the moment. So that's a lot of upside here, and there's going to be a profitable company and growing very quickly. And in the esports space, like I said, my kids don't watch terrestrial TV. They watch gamers, or they play games. This is the future, right here. And this is the company currently valued around about 30 million market cap. It's going to be profitable, and they've got some huge, clients and partnerships. This is, I think it's a cheap business, really is. Okay, what's next? On the market. This is worth looking at. It's a dip this week, right down to 64 million. Now, its nearest competitor is Rightmove. They are valued 90 times the valuation of On the Market. On the Market this year broke it and made a profit, first time ever. They're, like for likes as far as growing estate agents and stock is amazing. But I've set up a filter, right? Of the last 2 weeks, it's the first time this happened. Well, this is my emails, and I've got a folder here, my emails. So, of the last 2 weeks, using the exact same criteria to filter for properties on both OnTheMarket and Rightmove, these are the results I received. 10 email alerts from OnTheMarket, 6 email alerts from Rightmove. Why is this significant? There's 2 things you need to be successful as a portal. Okay? In fact, 3 probably. First of all, you need the stock. And that's agents signing up to you. They've got that. That's showing that. I'm getting very good. And the last 2, especially the last 2 or 3 I've got from OnTheMarket, have been really lovely properties I've hit like on, saved to my saved file. Very good. They're getting them before Rightmove. That means they've got stock there. That means the agents are giving them stock. They've got agents. That means their growing base of agents are growing, basically. And also you need eyeballs. And their traffic has been going excellently over the last few years. And it's getting bigger and bigger. And of course, the more properties they have, and the more exclusive they get, because they've signed this, estate agents own 65% of the shares of OnTheMarket. So, and it's cheaper for them. It's like £300 average per month. Rightmove is £1,000 per month average. So agents, have more loyalty to OnTheMarket, and they offer up these new and exclusive properties, which is what you want. If you're searching for a property, you want to be ahead of the pack. You want to get that new property, sent to you before everyone else at Rightmove does, because that's where the majority eyeballs are. And so you get these, and these new properties come out on the market. I think do you know what? I think it's going to do very well. And you can see my previous video on the market there. Okay, last bit of news is from Symphony Environmental. So they have plastic tech, and they've signed this Colombian company, Promisons Fanaticis, launches drinking straws which are both antimicrobial and biodegradable. Drinking straws producer leading and letting them, of course, straws these days, they don't work. My kids go to McDonald's and they have a milkshake. The paper straws just start going to mulch and you can't suck anything through them. So plastic straws, they're banned because they don't decompose, or they take about 150 years to decompose. They kill the environment. But with, Symphony Environmental's tech, it won't. 2-3 years to start biodegrading and they become food for bacteria. So and of course, on the weekend podcast, Steve asked about most, rubbish is burned. There's so much rubbish though, it doesn't get to landfill, it doesn't get incinerated, which is bad anyway for the environment, but it's just thrown out. It ends up in our seas. Now, if we had this tech, there wouldn't be a problem. 2 years, it wouldn't start breaking down. But it also, they've got antimicrobial, of course, so it's a critical area here, it just breaks down. And they can put this stuff, this tech there, it's basically, they have particles of their tech, which is inserted when the master batch is made for these straws or for plastic bags. It's like, I think the CEO, Michael, said it's like adding sugar to tea, pretty much. That's their stuff, you put it in, and it breaks down, or it becomes antimicrobial. So it's a no-brainer. So plastic is in our supply chain. It'll be in our supply chain for the next 5, 10, 20 years probably. So why not have it as biodegradable? I understand people are trying to edge away from plastic, but it's not going to happen for a long time. So in the meantime, why don't we make it, harness the environment? And the fact is they've got FDA clearance for their bread packaging. That's huge. That's a huge benchmark. They're testing with companies right now in America. And I think any day now, I think, next couple of weeks maybe, we're going to get some good news out on these customer trials in America. FDA benchmark, around the world, people say they've FDA clearance is a strict a level of clearance you have to get for that. So it's a good standard there. And so I think that it'll be open up other markets as well. They've also got, the contracts with the biggest bakery in Mexico, which is Mexico, 120 odd million population. Also in Turkey, biggest bakery in Turkey, 80 million population. These are big countries here. So slowly by surely, their products are making their way to the market. And I think it's only a matter of time before they announce something big. It's almost like, outside Europe and America, the market doesn't pay any attention to this. Unless you announce a big deal in Europe and America, the market doesn't seem to pay attention. But this is a very hot sector. They can add the antimicrobial tech to anything, from plastic surfaces, anything, toothbrushes. So it just makes sense. Because coronavirus will not be the last virus create a problem. We've had MERS, SARS, coronavirus has been the worst of them, but it just raises awareness. We need to do something more to stop these viruses. Like I said, their PPE equipment now, which they did an order for £1 million recently, it's all antimicrobial. That makes sense, doesn't it? It kills the bacteria. It doesn't stick to it, So there we are. There's all the news there from my companies this week. And as far as lockdown is concerned, I think if you're in a good company, it's an opportunity to buy. All right. I hope that provided some help to you. And midweek, I'll be doing another video, hopefully covering my returns and maybe any other news. Thanks for watching. If you lasted this long, many people don't. You're one of the few. Thanks for sticking around. By the way, if you're not subscribed and you want the next video to your inbox, by all means, hit that subscribe button and notification bell. And like I said, I do think this dip, if it's in a company that's, it's got cash, it's looking good, then it could be an opportunity. And that's what it is. If you're looking long term, I'm not talking about trading, talking about investing. Long term, it's an opportunity, I think, to pick up stock at a cheaper price. Pick up a business, a part of a business, cheaper than you'd normally buy it. That's what I think. By the way, if you want to subscribe right now, you can hit my face right there. I always point the wrong section. Face there, hit that notification bell as well, and some other videos there if you want to watch. Thanks very much. Until next time.